Manish, I'd like to start with you if I could. Now, before I was in Singapore, I spent years in Beijing covering technology founders. And what really struck me about them is how deeply buried they are in running their business, right? And to be fair, also in China, there are a lot of other things going on right now. So the idea of legacy or wealth planning just never comes up. How do you convince a very busy first-generation entrepreneur to diversify and think longer term?
Very interesting question, David, and good morning, everyone. I think before we address the issue itself, we need to understand why that is happening, right? So if you take the modern history, wealth creation happened in Asia recently, right, in last 30, 40 years compared to Europe or US, where there are fifth, sixth generation families who are already well established in terms of their processes. They have probably exited their legacy business, and now they are managing passive financial assets. Whereas in Asia, most of the wealth is still held by first generation entrepreneurs. To your point, David, most of them are tech entrepreneurs. Now we have crypto and metaverse entrepreneurs. I don't know how many of them are billionaires still, but probably there's still few left there.
Dollaraires, a lot of them, yeah.
Yeah, so we need to understand that in Asia, it's a relatively new concept. And like with kids, if you tell them to do something, they may not do, but what they learn is from observation, right? What their other peers are doing, what the parents are doing. Similarly, what happens with these entrepreneurs is no matter how much we talk to them, they will follow what the general trend is, right? So I think it's at a nascent stage. It will progress and it will mature eventually. Other big issue I see in Asia is seeding control. We know many famous billionaires whose sons are like 60-year-old, but still they have not handed over the reign to their kids or the next generation. The reason for that could be, a trust or the doubt on the capability of the next gen. Right now, keeping this as a background, how do we convince them? Like I was speaking to a tech billionaire who is 32-year-old, and he was like, Manish, what are you talking about succession planning? I have a 2-year-old kid. I want to focus on my business, probably have 2 or 3 more innings left in me. I said, yes, that's right. But tomorrow, if a bus runs over you or your plane crashes, I mean, we don't pray for all that, but these things are real possibilities. Your wife doesn't understand anything about your technology business or anything. So it's a very good risk mitigation tool that everybody needs to be mindful of. And even from their own business perspective, right? Business succession is equally important as family succession. So you have to balance that out.
No, absolutely. Now, I do have to ask a difficult question of you. You made the point people do as they see and they learn from observation. Given that we have 2 advocates of platforms with us today, I have to ask, in the era of Wall Street bets, Robinhood, and we've got YouTube clips telling everyone how they should invest and things like that. Why should an entrepreneur spend the extra money to go with a managed service provider rather than doing it themselves?
That's for me, right?
That's for you.
Okay. So technology is always an enabler, and it will always be, right? If you look at a lot of developments that has happened in the last 30, 40 years in the space of technology, that has not happened in centuries, right? So it's fast tracking. We are reaching singularity probably by 2040. It's predicted that artificial intelligence becomes even more smarter than human beings, right? We are yet to see that, but we are approaching there. So technology will always be enabler, but there are still very complicated issues which cannot be handled. Like there are a lot of data to suggest that most investors lack the returns of benchmark indices. And why that is there is because of the irrational investor behavior, right? Because they take certain calls which are wrong. Last year, I was speaking to a lot of investors who were like, oh, we are superstars, we invest in technology, we don't need any advice. Now, same guys are coming back and telling me, Manish, I'm in a fix. I don't know, I like did one particular asset class. Now, how do I risk manage, right? How do I recover all that? So these things require a lot of behavioral science. And as they say, investing is more of art than science. So you have to balance it out in that sense, right? There's a place for technology for sure, but it has to be an enabler and it cannot be the whole thing in itself.
No, got it. Rachel, I want to turn to you and ask, from an entrepreneur's perspective, you spent so much of your life building up this business.
Yeah.
What made you step back and think, I need to go beyond just what I'm doing day to day, and I need to think of my longer term investment future.
Yeah, so I started the business 17 years ago, and this was before smartphones, before online shopping took off like it is today now, right? So a couple of my friends and I came together because we wanted to sell our pre-loved clothes online for extra pocket money. So that was how it was. And after a while, we ran out of clothes to sell, and we decided to, with the money that we had saved back then, to import clothes to sell. And after a while of doing that, back then I was still in school, I was still in university. I would go during weekends or school term breaks to Hong Kong, Bangkok to import clothes to sell. But I realized that, there was always something missing from the pieces, be it the quality, the fit. No brand out there was really catering to the Asian women, right? A lot of international brands cater primarily to the American, European women who have very different needs, body proportions, skin tone than us Asian women. So in my final year of university, this was in 2010, with no fashion, no business background, I decided to drop out of school to start the business proper, to start creating our own pieces, our own collections, and creating our own brand. The tricky thing was because I was bonded to the government in university, so I had to pay off the government for a 5-figure sum, and I didn't have the money, and that was also when my dad's business was hit by the financial crisis, and it was going through bankruptcy. My mom was already working 2 jobs to support the family, and I didn't know who else to go to borrow that sum of money, but I finally went to my mom, and it wasn't until a while later that I realized that the sum of money that I eventually borrowed from her to pay off the bond was actually her entire life savings then. So she took that leap of faith in me, and back then I remember her asking me, is this a legal business? Will the government come after you? Why are people transferring money before they receive their goods? It's something that she couldn't wrap her head around. So yeah, that was then, and since then we have grown the business to what it is today, having 19 stores in 10 markets. And to your question, right? I think, David, for us, being bootstrapped all the way over the last 12 years as well, I always thought to myself that, okay, investing is for when I'm wealthy, investing is when I have a certain amount of money in my bank, it's not for me. And also growing up, I guess, right? The way my parents were also really influenced the way I looked at money and investing. And my parents had always been more savers than investors of their wealth, the little that they had. So for me, I think it wasn't until I had my son, my son about 19 months ago, that I decided that I need to really rethink how I think about money and wealth carefully. And that was when I met. Honestly, it was serendipitous, but I met Greg and the Endowus team, and that was really how it started for me. That was when I took it more seriously to start planning for my long-term finances as well. So yeah, that was how it started. I wish I had started my financial wellness journey, personal financial wellness journey much earlier. But to me, being a woman, especially in this generation, no one really talks about it, right? And I think sometimes, even for me, being a business owner, I still find that it can be quite intimidating when you talk about personal finances and, of course, investing. So I think this is something that I also hope through my experience to be able to make investing a lot more accessible to the everyday person.
No, certainly. I mean, given the state of index funds right now, I'm sure everyone wishes they started 5 years earlier into the bull run.
Yeah.
Now, Endowus is all very well and good for getting you low-cost access to, funds that wouldn't normally be accessible to you. But I do have to ask, a robot can't really help you plan your legacy or create a will or talk about succession yet. As you sort of go on your journey, given that now you're thinking about next generation, etc., is that something you'd consider? Maybe going with, a multifamily office or an asset manager, someone who's capable of making more of those services?
Yeah, I think for me, it's really exposing myself a lot more, to the different options and choices out there. And I think because I still have a pretty long runway in my career journey, so I think for me, it's important. I should have started yesterday. So I think it's for me to also understand, the risk appetite that I have, what's the runway that I have, and then, try to diversify as much as possible. I am still Well, embarrassingly, just very early on in this journey. So I think for me to hang out more with people like Sam and Manisha to get to know, to familiarize myself a lot more in this area would be very important for me.
Hang out with Sam. That's the life lesson here. Sam, with inflation on the rise, a lot of younger professionals are increasingly cost sensitive. They're worried about their salaries and their ability to fund retirements and families. Is this a factor you think will drive first generation users, especially onto your platforms like it?
Thank you, David. I think it's not just cost consciousness is not just a young person's issue. I think it's an issue for all of us, especially in this environment of very high inflation, persistently high inflation. I think that, if I touch upon what Rachel said, as first-gen, entrepreneurs, I was a professional investor all my life, but even I just don't have time to invest properly. And so investing is a full-time job, and there's professionals who do that well. And so one of the reasons why we built Endowus was because for me, and for Greg and for many people, investing is just painful. And it's very costly, traditionally as well. So as a digital platform, any offline to online conversion, and this is true not just for wealth or Endowus, but for any any offline to online conversion like Amazon or Netflix, if you really boil it down, really it's about two things. One is enhancing the user experience, and the other one is cost. And especially when it comes to investing and building wealth, cost is your biggest enemy, right? Why would you want to shave off 1-2% of your performance every single year and give it to somebody who's not adding value? So I think the digital platform, as we move to the next generation, and we've had family office members come in, but the next generation is growing up with, Rachel and I are familiar with mobile apps. That's where we do our financial transactions. And I think it's taken time in the wealth space where digitization has been very slow. But I think the COVID crisis has actually rapidly accelerated digital adoption in the wealth space. And so I think the next generation is going to demand a better experience and demand a much more fair and transparent cost.
My issue with you is that he just looks too photogenic. I always feel like he's trying to sell me fashion products rather than investment products. But
you should join Rachel, and Rachel.
That's right. No, you're all too attractive. Now, I have to ask you a hard question as well. I am subscribed to your newsletters, as I am to many other newsletters from financial organizations and investors. And I did note a May example was very prescient, talking about inflation, how big of an issue it was, and offered some examples of inflation-linked bonds and funds in that sort of nature, and inflation-resilient funds that would be useful in that environment. And the beauty of the Bloomberg terminal is I can plug their LEIs in and see how they've performed since May. And I have to say, in some cases, the answer is not very well. Given that, okay, let's take, if I'm a first-generation wealth creator, right? I'm facing an increasingly volatile market. My expertise is in networking with provincial officials and giving them multi, rather than actually looking at US Treasury bond yields, right? Isn't now actually the time to go hyper-personalized with services like those offered by Maitri and other investment managers?
It absolutely. I think investing is a deeply personal experience. Everybody's at a different stage in life. Everybody has different goals in life, different amounts of money, different risk appetite. So I think the individual will have to really, and this is why we say that we're not just a financial service company, but we're a content company, and we're so missional about financial education and improving financial literacy, because it is in the hands of the individual to make that decision, to assess who we are, what am I, what is my risk appetite, what am I comfortable with, what is my goals in life, what am I, using this money for? Because as entrepreneurs, I think, Rachel and I didn't start the business just to make money. We did it because we wanted to solve a pain point and, provide a solution for others. And when you're bogged down in the day-to-day business, then it's very difficult, as you said, to focus on the latest inflation or the latest market ticker, however great Bloomberg's terminals are. And I'm a 28-year user of Bloomberg terminals, so love it.
Of 25,000.
Quick plug for Bloomberg. But basically, I think that when you're looking out in the market, one of the most important things to understand is that not everybody's a professional, and as individuals, you look at the stats. S&P publishes a quarterly report on active managers and how many outperform. The first quarter was 80% underperformed. The second quarter results came out, 96% underperformed global market indices. 96% underperformed. And so, yes, we have the great Jim Rogers in the house, and so I'm not going to say it's impossible to generate alpha. When I was a professional investor, I generated alpha for multiple years as an investor. So it is possible, but it's difficult to do it sustainably and consistently and generate enough alpha. So we're in an environment this year where 96% of active investors are underperformed. And if you're a passive investor and you're building wealth over the long term, like Rachel, you think that it's late, but actually this downturn is probably an amazing opportunity to start investing regular savings and build wealth, because for the vast majority of the population, that is the right way to do it. That's what Warren Buffett thinks, and that's the strategy that we espouse. And just going quickly on the point of robots, and that's why I hate the word robo-advisor. It's a misnomer. There's no robot in the office trying to beat the market. There's no robo, and they often don't give advice. They just build a product, a fund, like a hedge fund or an actively managed fund. And invariably, over time, they underperform. So we like to call ourselves a digital wealth platform, where we're providing a service like Amazon and Netflix does.
The real takeaway I got from you is that we should all give money to Jim Rogers. That sounds like a plan we can all get behind, given that he's speaking. So if I can close by asking you, Rachel, somewhat difficult question. Right now, we're facing so many macroeconomic headwinds. How difficult is it, frankly, when there are so many issues facing all businesses, including yours, to think about these bigger picture issues, right? The sort of the legacy issues, the what you leave behind. And do you actually still think about, what you'll leave behind on the world once you're gone, or is it all about how the heck do I get my products off the shelves?
Yeah, I think at this stage of my life, I think being a mom also and taking care of so many people in the business, I think it's also more than just for myself. And I totally agree with what Sam said. I think it's also really making use of the market that they're in now, the situation that we're in now, to make bolder moves also. And I think this also applies both to the business and to our personal lives as well. So yeah, I think that's something that will be important for me personally and as a professional as well.
Second baby coming?
Second baby coming, we'll see.
Well, look, thank you so much. Oh, we do have one very quick question from the audience. Are digital platforms for mass and mass affluent investors consistent with using active managers and providing newsletters with investment opinions?
Yeah, I'll try to unwrap that question a little bit. It's putting in a lot of different things. First of all, I think digital platforms, obviously, in its early adoption, is for mass and mass affluent. But I'm a believer that we can actually digitize high net worth services. I mean, Endowus have grand ambitions to build high net worth, ultra high net worth solutions, private market solutions and platforms as well. So we're not just for the mass and mass affluent. We want to be a total wealth platform that serves you throughout your investment journey, through your investment life, especially if you build wealth and become a high net worth and ultra high net worth individual. So that's, I think digital is something, the future is digital. So we have to adopt digital solutions for the high net worth, and private banks and many other guys is doing that as well. The education piece is just something that we just have to continue to do and push on, because I think it's critical to the success of not only individuals and families, but society and nations. We just aren't educated well enough in terms of financial things. Even when I was a professional investor, I would run my professional money, tens of billions, in an institutional way, but then I would punt stocks and invest in my friend's company without doing any due diligence with my private money. So even as a professional investor, I'm not managing my investments properly. And when you invest, there is a right way of doing things. Things like diversification. 90% returns actually are generated by asset allocation, because the asset class is what drives return. So all these basics, we do need to give individuals and empower them to do it in the right way and make the right type of investments.
How did your PA go? Given that you're still working and not retired on the yacht,
I was told to do this me and my money session where I opened myself up to my worst investments. So it's there, $100,000 put into my friend's company, a fingerprint technology company, that went to zero. That was my worst investment. But in the financial markets, I've actually done much better.
I hope so. On that
Be careful
note,
of private markets. That's the
well, apparently the poll says everyone should listen to financial media, which is what happens when we stack half the room with journalists. But thank you, everyone. Please give them a warm round of applause. You've been fantastic.